Hey, good evening, everyone. Thanks for joining the induction session. Right, understanding about various analysts, their strategies, understanding some of the terms is very important for us before we take the trades or before we put our hard-earned money. So yeah, before I explain various terminology about various analyst profiles and how to interpret their messages, how to take their trades, all those things, is a quick disclaimer, right? Uh, Again, none in the team are financial advisors or FINRA certified professionals. And they are experienced analysts, but they are not certified by FINRA. So, right, and we all know investing or trading, it has its own risks. Otherwise, right, nobody will put money in their bank. Everybody will just put into options or stocks. It has its own risks, but again, if we do it with proper care, there is a potential. So the decision to invest or trade is for the members. So you have to take a decision whether you have to invest or trade based on. So that's what I asked, right? Check for a week or two if you're new members. Take 1 or 2 weeks time to do paper trade. Try to understand the messages of analysts, and then you can understand, right? Okay, this analyst trading style suits me. I am a busy professional in meetings throughout the day, so scalping may not be for me. So in that way, you can take better decisions. You can make a better choice there. So, right, one thing we all need to understand is mainly there are 4 types of trading, or we have 4 different types of analysts. The first type is scalping, right? Scalp trading or scalp traders, where maybe within few minutes, right? Maybe it may be 2 minutes, 3 minutes, 5 minutes, or 10 minutes. It is generally within minutes you open a trade and you close the trade. Especially, right, if you see, if you are in channel KC, right, in the main channel KC, in the morning, generally first 1 or 2 trades, he takes these scalping trades, right, where he looks for in the pre-market, he looks like which stocks are moving good. And then he looks for the breakout stocks in the morning. He takes quick positions on Tesla, Nvidia, AMD, such type of high beta stocks, quickly enters and exits within few minutes. So that is called as scalping, where you are holding a trade. That means you are buying some option call or option put and selling within few minutes. That is called as scalping. So generally this is good for experienced traders, right? If you are totally new to trading, it might be difficult for you to quickly enter and exit. By the time you go look at the option chain, buy, put like, okay, do I need to buy 2 contracts, 3 contracts, take all this decision, the price may, right? We know that option premiums are dynamic. They keep changing very quickly. So if you are a new trader, completely new to options trading or even stocks trading, generally you, right, don't go with scalping. Scalping comes with high reward, but also with a high risk. If you don't enter or exit on time, if you take it too late, even if there is a minute to 2 minutes delay, also premiums might go so high. So I suggest, if anyone is new to trading, always start with maybe day trades or swing trades or position trades, but not scalping. So generally the first 2 trades which Casey takes in the day between 8:30 to 9, they are scalping. Later they are more of day trades. Then we have day trading, right? For example, we have Analyst A, right? Or we have MG or even HK, right? They take some trades, then close some positions on the same day with some profits, right? They trim some positions. For example, if they're buying 10 contracts, they will take profits on 5 contracts or 6 contracts, and then they will hold the remaining positions for higher profits. So that is more like day trading, where you are holding position for few hours. It is not for just few minutes, but you are holding it for nearly full day, 1 day or 2 days, like that. It is, most of the time you buy sometime in the morning and then you sell around closure or something. Maybe you may hold 1 or 2 free runners for future, but majority of it you are closing on the same day, but after few hours. So again, yeah, right, if you are new, you should be still able to take these day trades, right? But scalping is definitely risky for new traders. So don't go with scalping if you are a neutral trading, less than 6 months of experience in options or stocks. Don't just look at the profit, but also, right? Because with experience, we can make that profit, but without experience, we may not be able to make profits. Rather than we may also lose. So scalping definitely not for the beginners. But day trading, swing or position trading is for everyone. Then swing trading, right? Where you are holding the positions for few days or maybe a week or two, right? For example, VC or HK, or right, we have multiple analysts who hold the positions for few days before closing them. So these are good for more majority of even new traders, or anyone. Swing trading is good. In position trading, where right you may be taking leaps. Uh, for example, Tesla goes back to 600 or something. You buy a 900 call of next year, right? You may be holding it for a few weeks or even a few months of that position, or right stocks. You might be buying some stock like Coin or CBNA or RBLX or something at a much discounted price now. Most of the stocks are at nearly 70 to 80% discounted prices, or right. In last 1 or 2 weeks, they went up, but they are nearly at 70 to 80%. So your objective is not to make quick profits, but you want to hold them for long term. You want to hold them for few months or maybe a year or so. Maybe right once things are back to normal, most of these stocks might go up by 50 to 60%. Right? There are a lot of stocks which are nearly 80% discounted now. So in options, holding leaps, or in stocks, taking long term comes under this position trading. So we have all these 4 types of analysts in our channel. So based on your experience, based on your time, you can take whichever. If you're a full-time trader, or for example, your spouse, she may be a homemaker. She may have time, right? Even you can teach trading to her, or you can show how to take positions quickly in and out. And then maybe she can, even though you are busy in meetings, she can manage those scalps or such type of things. So unless you are a full-time trader, or you have experience, or your spouse can support you, don't take the scalps or quick trades, especially first 2 to 3 trades, which Casey takes between 8:30 central to 9 central, right? Most of those are scalp trades, but most of the others come under day trading, swing trading, or position trading. I hope everyone is clear about the 4 types of trading or 4 types of analysts we have, and what are the differences between each one. The next thing which we all need to understand is, right, especially for stocks, right? If you are, if you want to invest into stocks, or you are in stocks channels, you need to understand there are mainly 3 types of stocks. They are called as large cap, mid cap, and small cap. Large cap are generally all the matured companies, right? Like Tesla, or if you see Costco or Nvidia, or generally expensive stocks and very matured companies, Procter and Gamble, Disney, all these are large cap, right? Dominant industry leaders. And but the growth potential is generally lower than mid cap or small cap, right? They won't suddenly go up by 20%, 30% on a day. They grow slow, but they are right. Even though market goes down, if you wait for a few weeks, again, these are the first companies which will come back up, right? Tesla may go to 600 or 550, but if you give some time, again, it will come back to $900,000 or $1,200 back to its normal price. Amazon may go down, but it will come back. Nvidia may go down, but it will come back. So these are the top companies. These are the top S&P, right? S&P top 100 companies. That means these are fundamentally strong companies. They have a good business. They have good products. So even though in short term they might be going down, they are fundamentally strong companies. They have a lot of customers, a lot of subscribers. So they will always come back. So the profits or the growth might be little slow compared to small and medium cap, but the risk is less. The liquidity is high. If you want to sell Tesla stocks, there will be hundreds of thousands of traders who will be ready to buy that stock. So the liquidity is high. and generally risk is low with these stocks. So if you are buying stocks and if you are a new trader, it is always better you start with these large cap stocks, right? Large cap companies, good top S&P 100 companies or top S&P 200 companies. These are the best ones because even if they go down, you don't need to worry. They will come back up in some time. Maybe sometimes it may take few weeks, sometimes it may take few months, but the risk is very, very low with these companies. Then you have mid cap companies, right? For example, Macy's or right, generally the $20 to $50 range. Such type of companies are called mid cap companies. So they are like growing companies. So for example, Lucid, LCID, or Macy's, or there are a lot of companies. So the growth potential is high. The liquidity is moderate. If you want to sell Tesla or Amazon, you will have a lot of buyers to buy them. But this mid cap, again, right? Still, it is not as high liquidity as large cap, but still you have good amount of buyers always for these mid cap companies. And the risk is moderate, right? It is like average. It is not too low as large cap. It is not too high as small cap. It is moderate risk, right? For example, PLTR, NEO. There are a lot of companies in that range, $20 to $40 range, right? There might be some companies even at a bigger price range, but in general, these are generally $20 to $40, $20 to $50 range of stocks. So again, if you are new to stocks, mid cap is also good, right? Then we have low cap or penny stocks, generally less than $10. These can go up so high, suddenly they may move 200, 300% up, and also they can go down in the same way or much quicker way. So these are, the growth can be so high, but also the risk is also very high, right? So if you are new to trading, if you are new to stocks, if you are new to right, investing into this market, US market, better you avoid these small cap or penny stocks, because right, it seems so attractive, but it is also very, very risky if you don't enter on time. For example, right, 2 days back we saw a stock which moved nearly 700-800% up. From $2 it went to $14 within few minutes, and again it fell to from 14 to $4. So right, if you don't catch it at the early stage, the risk can be high. If you catch them at a peak, right, instead of buying at $3, $4, if you're buying them at $11, $12, and if you don't sell them on time, or if you don't have a trailing stop loss, the risk can be high. So if you are new to trading, don't start with or don't invest into small cap or penny stocks, which can turn very, very risky, right? Always mid cap, the risk is moderate. Large cap, right? You don't need to buy huge, right? You don't need 1,000 stocks, or you don't need 500 stocks. Even you buy 20 stocks of Home Depot, or 20 stocks of Costco, or 10 stocks of Tesla, or 20 stocks of Amazon. Even if they move 5%, you can make profit, right? Instead of taking huge risk with small cap, it is better, right? If you are a quick scalper, if you know how to use trail stop, all those things, maybe, right, it is okay for you to take some risk with the small caps. But unless you are an experienced trader, don't take these stocks generally which are less than $10. But because we have all types of members, right, in the channel, we give small cap stock recommendations, we give halts, we give mid cap, we give large cap, to cater to all different types of members. It doesn't mean that we want you to buy small cap if you are a new trader. So if you are new to trading, please avoid this small cap, right? They may seem attractive. Same day you may make 100% profit, but we can also lose 100 or 150% same day if we don't enter or exit at right time. So that is right. One more thing I want, right? These are some examples, right? AMC, Macy's, Fubo, Tilray, Nikola, right? Small cap are like OCG and NAKD, SOS, SNDL. Sometime in 2021, it moved 300, 400% within 3 to 4 days. OCSGN also moved in the same way. NAKD also moved in the, but if they go down, it takes again months, years for them to come back. But a large cap stock, even if it goes down, it may come back within few weeks or maybe maximum few months. But these may take few years to come back again to their original prices. Right? So that's why avoid, if you are a new trader, please avoid the penny stocks or the small cap stocks. Large cap and mid cap is okay to take them. Right? Again, we have analysts. Some analysts give small cap. Some of them are good in giving large cap. Some give mid cap. So I'll explain which analysts give what type of stocks, what type of options. Right? Mainly, right, we have a big team, but as of now, because of the market situation, right, we are limiting the alerts. We have mainly 6 to 7 analysts. So in stocks group, if you are in stocks channel, we have MG, right, Mahendra. He got right around 8+ years of experience. He is very good with short swings. That means maximum your whole period. You are buying a stock and selling within 1 to 2 weeks maximum. Right? He gave PLTR or NIO. He's very good with options, stocks, futures. He uses Fibonacci series. Right? He's one of our top analysts. Generally, position period is 1 to 2 weeks. Right? The risk level is moderate, right? Because generally these are mid-cap stocks. He generally gives a lot of mid-cap, right? Not huge, expensive or not penny stocks. Mid-cap stocks. So your price is generally cheap and you quickly make 10%, 15%, 20% profits. And then we have MK. MK, yeah, right? MK got around 6 years of experience. We have something called as halts, right? There are some high momentum stocks. If they move so quickly within a 5-minute period, if they are going up by 5% or something, there will be, right, that trading will be halted. Right, for example, we saw HKD, it moved from nearly 33,000% within a week. From nearly $10, it moved to $3,000 plus. So it halted for so many times. So we have a channel or we have a bot, automated bot, which will be looking for these high momentum stocks. And whenever these halts are happening, immediately it will send that there is a, right, this stock got halted, this stock got halted. That means halt can be up or it can be down. So earlier we used to give more of these, but again, some new members were not able to catch them on right time or sell them on right time, not able to, right, use the trail stop loss. So we thought, like, again, it is, right, it can make a lot of money, or we can also lose if we don't catch it at right time. So still we have the bots, which will be sending like which stocks are getting halted. And whenever you see some halt, right, if some stock is getting halted, if you have Thinkorswim software, for example, HKD got halted so many times, right? There is a website, right, called NASDAQ, right? It will also show the halt history, right? Which stocks are getting halted. So, but right, our channel, the same thing, whenever it gets some stock get halted, right? MEGL, RDBX got halted. So it is on August 5th, right? We know RDBX is another company, right? If you go to this halt history, right, on August 5th, if you see, right, MEGL, RDBX, 1529, right? It is Eastern Standard Time, 1535. So whenever something, any stock gets, right, MEGL. So let us see, right? So immediately our bot will send you, because you don't need to, right? You cannot be on this website and look like when some stock is getting halted, right? So you have a website where those halts will immediately come here, right? MEGL got halted or RDBX got halted. If you see MEGL, right? Right, in Thinkorswim, you have something like, you can watch live news, what is happening at MEGL, right? We can see how You see some halt and then immediately you can enter that news here. You can see, okay, is there some good thing about it, right? It is a new IPO and it opened at $50 and right from it opened at $50, you can see that right in the market, right? End of market, it went to 97 from $50 or the day high was $235. So nearly, right, nearly 400% on the same day. So if you go to this channel and say MEGL, right, on Friday, how many times it got halted? So you can see MEGL, MEGL, MEGL. So many times it got halted. So again, for experienced traders, right? I am not telling for new traders, it might be risky, but if you see something is getting halted, right? We saw in last year DWAC. It started at $5, it went to nearly $200 in the next day. It got halted multiple times. So if you can use trail stop loss, that means you buy and you say that, okay, if it goes down by some 10%, 15%, I will sell it off. So if it starts at $5, it is going up by up, right? You are using a trail stop loss. Whenever it comes down by 10-15%, it will get sold off. Otherwise, it will keep on going up. So if you can use trail stop loss, this halts is a good feature, right? You can, whenever you see some halt, you can come here, see what is happening, how the stock is moving. You can go to the charts and then, right, all the new IPOs generally get halted multiple times on their launch. So, right, this will help for day trading or high momentum stocks. This channel will help you, right, for experienced traders. So because if you don't, instead of buying at $60 or $50, if you buy at $150, right, on Monday, Tuesday, it might come back to $70 or $80 again. So for new traders without experience, it might be risky, but if you're an experienced trader, if you know how to use trail stop loss, definitely these halts we can make big returns, right? You use trail stop loss, as long as it keeps going up, you can make, again, once it goes to some point, and then for example from 50 it went to 235, from 235 it will come down by 10% to 210, then you can sell it off, right? So I hope everyone is getting right. What is halts? Halts are basically whenever a stock is moving very quickly within a 5-minute time, it is moving so high. Then the trade there will be halt for 5 minutes. That means that no trading won't happen for 5 minutes. So immediately we will get an alert to this channel saying like, oh, this MEGL got halted, or this RDBX got halted. Right? RDBX is another stock which moves. So, right, like DWAC, RDBX, then HDK. So there are some stocks like that, right? Which if they, right, for example, SOPA, SOPA is another stock. Then you have ISIG. There are some stocks, if they start moving, right, these are like short squeeze stocks. If they start moving, they will go up, go up, go up. Suddenly, right, they move up 300, 400% within a day or two, and then suddenly they will fall. So if we catch them at the first one or with the first or second halt, we can make good money. But if you are catching them at 7th or 8th halt, we might be losing money. So that's why for new traders, avoid these halts, but experienced traders, if you know about the market, right, the bot is helping you with which halt stocks are getting halted. You can immediately go here, put the info, look what is happening, look at the chart, and then you can get in, use a trail stop loss. If it moves 200, 300, 400, right? I told you, right, HKD, it moved, right? If we can just get hold of one stock like this, our 4 to 5 year salary we can make, right? It moved. AMTD digital stock is up more than 30,000% in 2 weeks. It moved from $13 to nearly 2,600 or something, right? So again, if with experience, if we can take it, if we can catch it, definitely there is potential. But if we catch it at a wrong time, we can also burn huge, right? So I hope everyone is clear about halts. So MK earlier he used to give these halt alerts, right? But again, right, IPOs, there is no past history. So we don't know. Sometimes IPOs can move 300, 400% on the same day when it gets launched. Sometimes it can move 100% and suddenly come down. So there is no previous history, so no technical analysis can be done. But it is just like a, right, we can take some small risk and we can play just like a lotto trade in options. We can do halts. And now he is giving more of swing trades, day trades. And then we have HK. He is more of a swing trader. Generally, your position period is 2 to 4 weeks. We have VC, again, swing trades, 2 to 6 weeks. PB, Prasad from India, he got around 20 plus years of experience, right? He gave, right, he generally gives high beta stocks, and right, we post them in long term because market is little bearish. So we slow down posting this long term, but again, once we see a reversal confirmation, we'll start posting long term position. So you can start taking for your 401k accounts, your retirement accounts, or where you are not looking for quick in and quick out, right? These are for investment. So we'll be posting, right? It can be Amazon, Tesla, or whatever, AMD, Nvidia, or whatever good fundamentally strong companies for long-term investments. Then we have Sunny, again for shorting. He gives some shorts. He is good for bear market. But again, right, we have a lot of analysts, but we are trying to limit the positions because of the right market uncertainty unless we see very strong confirmations. So right, your best bet is MG or HK, VC, and once market gets stable, right, then you can also go with. We will also be posting more alerts from PB and so on. That is about stocks, right? You have the risk tolerance here. So based on your risk tolerance, you can take the trades. And this is like general duration, what you can expect for them to meet the targets. And if you have target 1, target 2, target 3, sometimes, right? This target 1, target 2, target 3 are like your support and resistance levels, right? For example, if you see, if I am buying something here, right? This is my first support level. That means generally people tend to buy stocks at this particular point. So this is my target, or right, let us say from here, I bought something here. This is the first resistance. That means people generally buy here and sell here. So this is my target 1. Sometimes stock can come down little and then again it can break out. Right. So generally I take 60% of profits at target 1. Sometimes if the bullish volume is more, people are buying more and more, there is a positive sentiment or there is some good news, then people will, even though there is a resistance, people will hold it. There will be more buying volume, then it will go to the second resistance. So this is like my target 2. This is my target 3. So generally, if an analyst is giving target 1, target 2, target 3, you take some positions 65, 70% here. And then your stop loss initially might be somewhere here. Now your stop loss will become your entry point. And once you reach to target 2, again, sell another 20, 25%. Then it comes to target 3, you sell the remaining. Or if it is coming after reaching target 1, it is coming little down, you can sell it off. So again, it all depends on our risk tolerance, right? Some of us will think, oh, why I want to sell at target 1, let me wait for target 3. It may suddenly come down, we may lose profits, whatever we may get here also. So by taking more risk, we may make more or we may also lose more. So it is up to us. But generally, the best practice is target 1 takes 60%, target 2 takes 25%, target 3 take the remaining 15%. So if you have multiple targets with a stock, generally take multiple levels so that even after coming here, if it comes down, you are still not at a loss. You already took some 60% profits at the first target or at the first resistance. Right? Let us talk about options now. Right? It is what everybody likes because With stocks, you have to invest huge and your returns are small. But the risk is low generally, right? Sometimes it may come down, but again, if you wait with patience, it may come back after a few weeks or few months. But with options, you have a time decay. You have a specific period within which it should reach as per our expectations. So options come with high risk and also high reward. Wherever you have huge money, right? Futures you can make huge, but we can also lose huge. Futures is much more riskier than options. Options is much more riskier than stocks. Bonds is better, right? Stocks is riskier than investing into bonds. Then bank, saving in bank is less risky than investing into bonds. So based on, right, our risk appetite, or based on our, if we want huge rewards, we have to take more risk, and we have to understand whether we are ready for that risk or not. So if things go right, we may make huge, or if they don't, we may also lose huge with high risk strategies. But again, one more thing we need to think: bank, with the inflation going on, even though we may think like, oh, I kept 10K, it is still 10K, but because of the inflation, we have only 9K there. So it is actually there also we are losing the value of the money by just keeping it in the bank. So, but still, right here, we will be having a lot of emotions, and we'll be buying, selling, all those things with a lot of emotions, and without having proper patience. But if we need to understand, right, what is our risk appetite, what is my risk tolerance, can I sleep peacefully if I lose this money, or am I okay to take that risk, right? If I have a personality where I cannot sleep with open positions, then maybe 10% profit itself is good, or even 5%, right? Enter into every position. When you make 5%, just close the positions. Then you can sleep peacefully. But if I want 100%, if I want a multi-bagger, 300%, 400%, it may take a week or two for them to go to that point. And stocks will not go in one direction, right? Our option premiums will not go in one, they will come down. For example, we saw BBBY. MG gave some time around 3 or 4 weeks back for a 7 call. It went nearly 60% down, and then yesterday nearly 200% up on Friday. So stocks or option premiums, they keep going up and down because you have millions of buyers and sellers. Some will be buying, some will be selling, some news. There are a lot of factors which will depend, right? We are only looking at support, resistance, volume profiles, all those things, but there can be a fundamental news, some job report, some FOMC report, or there can be some war news, China, Taiwan war, or Russia, Ukraine war. You never know. Those fundamental news can invalidate all the technical analysis. So based on our risk tolerance, we have to invest. And if things go right, if there is no fundamental news, nothing is coming, generally technical analysis will work good. But if you have some bad news, or if suddenly some new monkeypox virus spreads a lot, or some new variant comes, suddenly whatever technical analysis you do, everything may not work, right? In bull market, everything goes so well, but in bear market, when there is a lot of news driven market, things may not work in that way, right? So again, I have to understand what is my risk tolerance. Am I okay to lose some money? Am I okay to take additional risk, or am I okay to just take 10% and feel happy, right? Making some profit is better than losing the capital or preserve, right? So it is up to us based on our risk tolerance, because analysts can only look at direction. Okay, is it right? Okay, it is at support level. This is the next resistance, so it can go up to here. They can only look in that angle. Sometimes it can break the next support level. It can go to right. Tesla, we saw suddenly Thursday it moved so high. Again on Friday it came so down. So sometimes it can have, right, multiple. It can break multiple supports, or it can break multiple resistances. So that's why we need to decide based on our risk tolerance. We can take right, quick profits, or we can. So generally what we suggest is, if you are buying 10 contracts, let us say the premium is $1, you are buying some 10 contracts, that means your investment is $1,000 on that options. Then if it moves by 15% or 20%, take your capital back. That means you sell 5 contracts. So now your capital is back. So the remaining 5 contracts are completely free. That means you are investing, or you have 5 contracts, but your capital is in the same way. Right? With those 5 contracts, you can take more risk. Maybe once they move to 50%, take another 2 contracts and just keep those 3 contracts until expiry. So now you are taking a risk, but your capital is not impacted. In that way, right, you won't have much tension now. When your capital is at stake, you will have more tension. But quickly it moved 10, 15%, 20%, you took your capital back. Now your risk is very, very less, right? We saw HK gave some tickers, CVNA moved nearly 1000%, or HD moved nearly 1000%. There are a lot of multi-baggers which he gave, which moved huge, right? And but don't think that, oh, if it moves 1000%, why I have to sell at 20%, right? You never know. Suddenly some bad news comes and that might completely go down. So getting that capital back is very, very important. And then after getting your capital back with those free runners, right? So that's why you see trim 1, trim 2, trim 3, so that we are trying to help some of you to take positions, right? Some people will say, oh, why so many trims, right? Just tell me up to what point it will go, right? Nobody can know in this choppy market or in these market conditions. If it is 2020, we know that they will just go up, right? There is no war, there is no COVID variants, there is no inflation, no recession, nothing. But now we see that every day we see some news. So in this market, always better to take some profits early, and then maybe 1 or 2 free runners, keep them until last day. They may become multi-baggers, give 300, 400% or so. So again, we have 6 analysts for options. Again, we have a big team, but again, we are limiting, because already with 6 itself, we are, with the help of algo, we are able to give a lot of positions. And right, we are limiting positions because or limiting more analysts, because already it is, right, we are giving a lot more than anyone can take. So again, Casey, he is an expert for scalping and day trading. Generally, is very quick in few minutes, right? We saw Shop made nearly 400-500% on Friday with Lotto trades. Again, those Lottos, that means same week expiry or same day expiry, they come with huge risk and huge reward. Suddenly, if stock moves on the same day, it can move 400-500%, or the capital can become zero also. Again, we need to understand, if I have a high risk tolerance, I will take those Lotto means the closest expiry. I will take them. Otherwise, I may just take one contract, or right, if it is cheaper, I may take. Otherwise, I will avoid. I will buy the next week. Right? It is up to our risk tolerance. Right? If you have a high risk tolerance, you are okay to take high risk to get more reward. You can buy the same week expiry. If you have a low risk tolerance, right, you want to be conservative, you don't want to be aggressive, you can go with the next week expiry. So generally, Casey, sometimes he won't even tell which contracts he is buying. He will just say, okay, I am buying Amazon 120 calls, or Amazon 150 calls, or Tesla 850 calls. So it is up to us based on our risk tolerance. Sometimes he will put, right, okay, I am buying for 5th August, or I am buying for 12th August, I am buying for 19th August. He will put those dates, right? Especially Casey, right? Everyone else will put the dates and also the price, but Casey won't put the price and date, because generally he deals with high beta stocks, right? Tesla or Nvidia or Costco, right? Or CRM, where generally the premiums are high. If he put a price, for example, he says that I am buying Tesla 850 call at $20. Somebody goes after a minute and he sees that it is at $21. So he thinks like, oh, it already moved by $1. I won't buy it. Suddenly it goes to $40 within next 10-15 minutes. So we may miss that opportunity, right? Or because these high beta stocks, the premiums move so quickly. So sometimes if you can catch within that 30 seconds to 1 minute once he posts it, it is okay. You can take it. Otherwise, you can you can just ignore that alert. If you cannot catch within that first 1 or 2 minutes, once he posts that alert, you can ignore those. And based on your risk, right? If you want to take high risk, you can even buy the same week contracts. That means whatever is the closest expiry, you can buy them. If you have a low risk tolerance, always buy 1 week. They will be little more expensive. The profit will be less, but you have more time, right? Your theta decay, your time decay will be slow. It won't immediately go down, right? If it is same week expiry, the premiums will go down very quick. Your theta decay is very quick, right? So in tomorrow's session, I'll explain what is time decay, what is theta decay, what is delta, right? All the Greeks, option Greeks, but just understand that if the risk is high, the reward is high. If risk is low, the reward also will be low. So based on our risk tolerance, you can decide whether you want to take a high risk and make a high reward, or you want to take a low risk and low reward. It is up to you. So especially with Casey, that's why he won't mention the price, because sometimes you may see it already moved by $1 or so, and you may miss the opportunity. Or you may right, you may feel that, oh, it already came down, then what Casey bought, you may miss the opportunity. But these are high beta, especially Tesla. It moves so right, so volatile. There is a lot of liquidity, so many millions of buyers and sellers every minute. So that's why, right, for Casey, if you are a new trader, you can, right, avoid Casey trades. If you have some experience, some 6 months or so, then yeah, Casey, you right, he's like Sevak, you can make huge, or you can also lose huge. So if you have a high risk tolerance, you can take Casey trades. And especially with the algo, he is giving a lot more alerts now, right? The algo will generate, right, immediately whenever it shows buy or sell, right? For example, it right, FANG, it shown buy here. Immediately he looks like, if everything is looking good, he immediately gives a buy alert. Then the stock moved up to here, right? From nearly $112, it went to nearly $120. Whenever he sees here, then right here we bought calls, then here we will sell those calls, like that, right? So with the help of this algo, right, we'll be getting all these alerts into our algo channels. Then the analysts will be looking, right? Some of the analysts, not everyone is looking into, right? But mainly Casey and Honor, right? HK, their HK is also not looking into everything. He will just look one or two, but MK, they are looking into algo alerts and able to give a lot of more alerts. So again, they look at Ichimoku cloud. Is it above the Ichimoku cloud? And the algo looks at various things. Is it right, crossed simple moving average or exponential moving average? Lot of various factors. And then if it is a bullish day, we can make huge money. Or if it is a bearish day, we can make huge money. If it is a choppy, that means you have a buy here, you have a sell here. You have a buy here, you have immediately sell here. We may lose on that day, or it may hit a lot of stop losses, right? Friday morning for 1-2 hours, it was choppy, it was moving up and down. But the Thursday or right Wednesday, it was just bullish. So if you get a buy here, you won't get sell until next 10-20 points or 10-20, right? Stock mode from if you took some, right, Nvidia or right, let's take buy here, right? You got a buy here. Right, we are in 30 minutes. Generally for scalping day trading, we use 5-minute time frame. So we got a buy. So from here, nearly $185 up to nearly $190. It is nearly 5 points. That means your option premiums might move by nearly 100-200% for the same week, right? Like that. So if it is a bullish day, if it is a good day without any news, without any FOMC, all those things, there is a huge potential to make a lot of money. Or if it is a complete bad day with a bad news, right? You saw some, okay, China, Taiwan, there is a war. You will see a sell, then you will buy a put, then it will go down 20-30 points. We can make 300-400%. But if it is a choppy day, if it is buy, sell, buy, sell, buy, sell, within every 10-15 minutes you are getting, then that day we may have some stop losses. So Again, 1 or 2 days, right? In a week, if you have one choppy day, but other 3-4 days either bullish or bearish, we can make money. So don't decide just based on one choppy day. That's why give some time, wait for a week, take some paper trades or put it in Excel, and then you know overall whether we are making profits or not. Right? With the help of this algo, we have hundreds of stocks which the algo will be scanning, and it will be sending all those information, right? So for example, strong by TXN, strong by MDT, strong by Costco, $541 at 2:50 p.m. Strong by Oracle, right? Master, so early by SPX, you can buy, or strong by UNH, Oracle. So we'll be looking which one is good, and we will be taking some of them, right? The analyst will be tracking, and they will do one more confirmation to make sure everything is looking good and there are no other news, and they can post the trades, and we can make good profits, right? So again, going back, right? KC is for scalping, day trading. MG, he has his own strategies, and he is also very consistent. Again, one of the right top analysts, very good with, right. KC generally takes high beta. That means your premiums are generally high. So if you make money, you make huge, or if you lose also, we may lose huge, because Tesla or Costco, generally the Amazon, Nvidia, the premiums are high. But MG uses low cap or mid cap stocks, right? For example, AMC, it moved nearly 1,000% on Friday. Or right, there are a lot of other things which he took, which, right. So, right, generally, right, if you see DKNG, right, less than $20 stock, FFIE less than $20, BBBY, Bed Bath Beyond less than $10. Generally, his stocks, right, MG, whatever MG takes, the option premiums, generally they are very, right, generally uh, mid cap or small cap most of the time, right? He might take some Tesla, but generally the premiums are cheap. So the risk is also generally cheap. Risk is low with MG trades. So if you have a low risk tolerance, right, MG is one analyst you can follow. If you have a high risk tolerance, right, KC sometimes, right, Friday morning it was choppy, so there were some lot of stop losses. But Thursday, if you see on the right, even Friday there were some trades, right. UPST moved nearly 500%. mRNA moved over 100%. So either you make huge money, or you can also lose huge, because those are high beta stocks. But again, on uh, on Thursday, except the Tesla 950 call, everything else, because market was purely bullish on Thursday. In the same way, even if you take, right, even here, right, nearly everything he made profits. Wednesday was right, again a bullish day. So nearly all the calls, MSTR, Nvidia, Microsoft, Meta, except Tesla, everything is calls. Market was bullish. He made good money. So you can make huge, but if it is a choppy day, we can also lose. So depending upon your risk tolerance, if you have a high risk tolerance, and if you like high beta like Tesla, those things, you can go with KC. MG generally for mid cap and low cap. And VC again, right? He is like Rahul Dravid, where these are swing, right? If you don't have time to quickly get in, get out, then VC generally, right? He takes 1 or 2 days for his positions to close, or more than a week to close. So he looks at earnings, he looks at other factors, and he's also another experienced analyst who is more for swings, earning calls. HK, again, he is also very good. He's a multi-bagger expert. Many of the trades which he gave, again, he will say to book the profits, take your capital back. But right, if you see HK trades, right, there are some trades, right? For example, CV RBLX. He started 1 week back at 45 cents. It went to nearly 420%. And then AFRM, let me show you. Right, CVNA 30 call on it moved nearly 780%. Again, for 812, he took it moved nearly 450%. So he's like a multi-bagger expert, right? You have to just hold with patience. The stock can move up and down, but his trades are like multi-bagger, where you hold 2 or 3 contracts. Don't hold everything, assuming that everything will go 600, 700%. A lot of his, right, there are a lot of his positions. Generally, they move 20, 30% on same day. But if you wait with patience until expiry, there can be multi-baggers like this. There are a lot of tickers, the CVNA or RBLX or right. I can send you a list of lot of tickers which moved over 400, 500%. So right, that is HK's specialty, where you take some right 20, 30, 25% on the same day, and then keep some for until expiry, and they will become 400-500% like that. And generally, he goes with top S&P 100 stocks. And then AA, right? He's our another new analyst who is good for SPX and SPY trades, right? He is very good with SPY and SPX levels, and he's doing that 5K challenge, where if you open an account with 5K, he opened an account with 5K, and he's taking each and every trade. He will tell like, okay, I am buying 2 contracts, I am buying 1 contract, I am selling it here. He'll show everything. Right. He's taking each and every position what he's stating. So within 2 weeks, nearly we are like already from 5K to into 8,800 or so. Right? Maybe next week we'll meet that, right, within 2.5 or 3 weeks from 5K to 10K. That will be done. So AA is another right experienced analyst who is very good with SPX and SPY trades. He also gives others, but he is very good with SPX and SPYs. Then, right, again, if you have Robinhood, you may not be able to do SPX, but if you have Thinkorswim, you can do SPX. If you don't have Thinkorswim, if you cannot do SPX, you can just do SPY, right? SPX is basically 10 times of SPY. So if he is taking 40, 30, you will take 403 SPY call like that. And PB is another, right? He got over 20 plus years of experience. He's from India, and he is for high momentum stocks, right? Again, there was some, initially he gave a lot of great tickers last year. Then again, he took some time to change his strategies. And now again, all his success rate is 80% now again in the last 1 month. So he gives high momentum stocks, and again, they are making good money. So again, based on, right, your risk tolerance and based on your time, you don't need to think like, oh, there are 20 trades, I'm only able to take 1 or 2 trades. That's okay, right? You don't need to take all 20 trades, or you don't need to follow each and every analyst. You see for a week or 2, right? We'll be sending daily report. We'll also put a, right, we are thinking to have something, a report where, right, I will show you an example. So we want to put something like option ticker, right, in a Google Drive. At the end of the day, what positions we have taken, right? What is the current premium, right? What is the entry? What is the current premium at the end of the day, right? We cannot do real time because the sheet can be, right, anyone else can access the sheet, and without joining the channels, they may have access. So, but at the end of the day, we'll be putting all the positions taken by all the analysts at what was the entry point and what is the, so that especially with HK and others, and it gets updated automatically, right? The premiums get updated, right? If we have taken something at $1, at the end of the day, if it is $2, so the Google Sheet will be updated automatically with the premiums, and then you can see that, oh, it moved by 100%. Let me take something back, my capital back, and let me keep some free runners for more time, like that. So we'll be start sharing this from Monday with all the stock positions, at what point we have taken, what is the net change on the day, who is the analyst, and what is the option tickets we are taking, or those calls, and what is the net change on the day. Will be right. In addition to sending the daily report, we will also have access to this report, right? So this is, so you can decide based on which analyst you want to follow. Maybe following everyone is difficult, but if you can decide one or two and you can follow them, right? If you are an experienced trader, you have a big account, KC might be your best bet. You have a small account, maybe AA or MG, right? You have a big account, but you don't have a lot of time, maybe HK or VC or PB might be good, right? You take 2 or 3 trades and they close after 3 days, 4 days, 5 days, like that. So you have more time. Generally, these are like 2 weeks or 3 weeks from now, the closure, right? The next monthly expiries. Whereas these ones are generally very quick, right? So based on your time, risk tolerance, your portfolio size, your mentality, you can pick whichever analyst you think is closer to your mindset or your trading style, so that you will be more successful, right? If you are a new trader, you are trying to do scalping, we might get into losses, because you are, by the time you go there, look for, oh, Tesla, you saw AC giving Tesla, then you go here, you look for, oh, where is my 900 call? By the time already the premiums are going up by 20-30%. By the time you select it, you change the contracts, or you, instead of buying a call, you may sell a call, right? So that's why, if you are a new trader, please avoid scalping, and you can go with other analysts. If you are an experienced trader, definitely, right, you can make a huge with KC's strategies. And one more thing, if you are, right, even though there is a lot of volume during the regular trading hours, especially if you are in stocks channel, you can also do trading in the pre-market and post-market, right? We'll start posting some alerts in the pre-market also, right? Generally, there will be, for example, next week, I'm expecting Viru, right? VERU, there is earning, it will move huge, right? On Monday, we may see Viru stock can move huge, or SIGA, this monkeypox, they are declaring it as a national emergency. So SIGA, such type of stocks can, so we'll be looking at news, we'll be publishing some of those. So even though you are working in office, even before 8:30, 9 also, you can take some trades and you can make money. And most of the platforms, Thinkorswim, Webull, and the IBKR, nearly most of the platforms are supporting pre-market and post-market now. So, right, like in options, you can only do during regular trading hours. But if you are in stocks, you want to do invest into stocks, you can do in pre-market, post-market. So even after coming, right, you can look at the Google Sheet and you can take some stocks for even during the post-market hours also, right? And then one more major mistake we do is trading huge positions, right? Based on your account size. For example, let us say you have a $50,000 account. Keep some 30,000 for stocks and 20,000 for options, or 35,000 for stocks and 15,000 for options. And try to limit to, for whatever ticker you are taking. If it is a lotto trade, that means same day expiry or next day expiry, generally go with 1% or 2%, right? Maximum 2%. If it is a swing trade, maybe go with 3%, right? Based on your account portfolio size, you limit, right? Don't buy 10 contracts for everything. Don't buy 10 for Tesla, don't buy 10 for Lucid, right? Lucid stock price is around $20, whereas Tesla is $900. If Tesla stock goes wrong, But lucid, you make 100%. Tesla, it hits stop loss or it goes down by 50-60%. Then you are at a loss, even though you made one profit, one loss, but the money you invested at Tesla is huge. So always try to limit the position size based on the amount, right? Not on the number of contracts. If you want to invest, right? If you see this, you will understand, right? For example, you want to invest somewhere between $600 to $1,000 on every alert or every ticker, right? You have, let us say you have a $50,000 account. You want to put $1,000 on every ticker or 600 to 1,000 on every ticker. So if the premiums are around $1, then you will buy around 5 to 6 contracts. If the premium is 1.5, you will get 4 to 5 contracts. Premium is $2, you will get 3 to 4, like that. But don't buy, right, 10 contracts for everything. Whatever you see, don't think like, oh, let me buy 10 contracts, whatever alert, right? Because the huge premium one, if it becomes loss, and all the small premium ones, even though 9 small premium ones may make 100%, but one Tesla or one big Melly or some big stock, right, CMG, something, it goes into loss, you will be in a loss. So always put some amount for everything, right? If you're buying stocks also, okay, $1,000 for every ticker. So whatever stocks you get approximately for $1,000, you will buy them, right? Not the low cap ones. For low cap, maybe reduce the risk, or for lotto trades, reduce it to $200, $300, like that, if you want to gamble on something. But for others, generally you put some, okay, this is $500 for every trade or $1,000 for every trade. In that way, if there is a 75%, 80% success rate, you will be in the profit side. But if I take 10 contracts, 20 contracts, 100 contracts on every alert, then if so, even though I make 8 success, 2 failures, I'll be on the losing side. So that position sizing is very, very important. So please make sure you remember that, right? And then one more thing is, especially if you are doing for long-term investing, right? We'll be posting some stocks in the long-term channel also. So if you are doing long-term investing, don't try to buy everything at one time, right? If you're buying some Amazon or Tesla or AMD or Nvidia, whatever it is, don't buy everything, right? Maybe put, if you want to spend $1,000, spend some $400 now. And then again, it might go little up, but maybe buy another. So buying or selling for long term, don't do everything at one time. Buy in 2 or 3 installments, also sell in 2 or 3 installments. In that way, if it comes down also, you can average it out. Or even if it goes up also, it's okay. It might go up a little bit, but maybe after 2 weeks or 3 weeks, dollar cost averaging, right? That is called as DCA approach, where, for example, AMD or Nvidia, if you would have every month, if we would have invested some, right? Tesla was 600, 700 in last 2 to 3 months. If every month I would have bought some 10 stocks, 20 stocks, then now it is $900. Maybe in 6 months, it will be $1,200. Or even Monday, it can go up huge. I'm expecting that it will again, right? It will be bullish and go back to 900 plus or 950, approximately 950. So like that, doing the dollar cost averaging or buying in installments, increments is also another good approach, so that on average, you will be profitable, right? But some months it can be down, some months it can be high, right? This is the good opportunity. We generally, when Bitcoin is 60K, we'll be ready to buy. Or when Tesla is 1100, 1200, we'll be ready to buy. But when it is 600, we'll be so much scared, right? Nothing changed in the fundamentals of the company, right? We have still same leadership. Still Tesla is one of the top brands with a, right, with a great leadership, a great leader. So we generally avoid buying when it is going down. We get panic. We think like, oh, it will go to 100, it will go to 200, 300. But if you can do dollar cost, if you put all money at one time, if it suddenly goes down, you may get panic. But if you put only one, right? If you want to put 1,000, maybe put only 200 in June, 200 in July, 200 in August, and buy Tesla. Suddenly, right? What happened in 2020, right? March, because of Corona, everything went down. Suddenly everything started going up and it never stopped. Everybody after 2-3 months, they thought, oh, we missed a great opportunity. I should have invested. It might be same thing now. Everybody is thinking, oh, recession, everything will go down. Market reversed. We never know. Nobody can time the market. So don't put all your money at one time, but doing this incremental approach, dollar cost averaging, especially if you want to buy these long-term good company stocks, there is another approach you can follow, right? So again, as I told you, halts for new IPOs and high momentum or short squeeze stocks. It is if you are an experienced analyst, it is a good strategy. But if you are a new trader, if you are an experienced trader, it is a great strategy for new IPOs or right. There are some stocks like BBIG, SOPA, ISIG, or RDBX, or DWAC, right? These once they start moving, suddenly from $2 to $20, it will happen in 2 to 3 days, or even AMC, GameStop. These are short squeeze stocks, right? BBBY. They get squeezed like anything. Suddenly they go up so high within 1 or 2 days, and they will come back. So if you can catch them early, you can make great profits with those short squeeze stocks. So those halts will help you. That means these these Wall Street bets, or those will be everybody, right? They are investing into those stocks. Immediately they get squeezed. Suddenly they go up so high within 1 or 2 days, and then they get dumped. So if you are experienced, definitely it is a great way to take the advantage, and that halts channel will help you. Right. Again, that patience, emotion, right? Psychology, especially in this bear market, the recession is the best time to invest into stocks. Or right, we generally get scared. Everybody want to be away from the market, but this is the right time to invest into good companies or good quality stocks, because already within last 2 to 3 weeks, most of the stocks like Amazon moved nearly 50% up. From $90 it went to 140. Tesla from 600 to 900. CVNA, RBLX, lot of good companies already they started moving, right? So again, don't put all money at one time, but if you can do the dollar cost averaging, this is the best time to, right? Otherwise, after 2-3 months, again, we think, oh, how come I missed that opportunity, right? All those stocks were nearly 50% down. When we go to Macy's or go to any store, we always look for discounts. But in stock market, when they are at discounted, we'll be running away. When they are at high prices, we want to catch them and we want to buy them, right? Again, as long as they are fundamentally strong companies, good companies, we don't need to worry. We don't need to be scared, because right, the SPY is going up and up since last, right? You are seeing how it is going up from $10 to nearly $430 or whatever it, right? It went to 48, it came down, but again it will go back because all these companies will keep growing. Population keeps growing. The Tesla will start producing. It will have more factories. It will produce more cars. Amazon will be delivering more products. Nvidia, AMD, all these companies will be delivering more chips. They will be making more profits. So as long as it is a good company, quality company, don't worry, right? Even though your stock portfolio might be down, right? Again, if you invested into low cap or unknown companies, you right, it's okay. It might be a reason to worry, but if you are investment, right, that you can always take a risk with some little portion, but not huge portion with your money on the low caps, right? But as long as you bought some good companies, even though they're down, don't worry, don't stress out. All those things will be back, and take the opportunity when the stocks are at 50-60% discount. They will be, right? Amazon in March also it went down, and it became nearly from $2,000 it went to $4,000, right? Again, because of the split, now again it came to $100. But again, most of the stocks are 30-40% up in the last 50 weeks. So nobody can time the market, but time in the market is important, right? Nobody can time, okay, this is the lowest or this is the highest. But if we are in the market, there will be always some opportunities. right? With that, right, basically I explained how the analyst profiles, how to take small positions, how to take the option contracts, and right, we'll be sharing that Excel sheet at the end of the day with all the positions open. And right, so I hope session was useful. You were able to get some new terms, understand about different types of trading. And right, again, we have a good team, so there'll be always some bad time in the market we didn't do, right, because of technical limitations or some emotions that mirror trading or pooled, right, pooled again, we are trying to revamp it. But yeah, alerts, they are good analysts, experienced analysts, and I'm confident that as long as we don't become greedy, we don't try to take too much huge position size, if we can maintain the discipline, we will be successful, and we can right, everything, right, everything is uh, uh, everything is in the chart, so nobody can lie that, oh, I bought at a so and so price. And they analysts try to post information as soon as possible within few seconds. There will be only delay of few seconds, and with the help of algo, it is we are able to give a lot more alerts, so that even though you are busy in one meeting, you don't need to come and take it after 30 minutes. You have always some alert or other coming in every 10-15 minutes from one analyst or another analyst. So you have a good potential. So take time, take it on a paper. Though you don't need to have a FOMO that, oh, I will miss all the profits. Take a week or two if you are new to the channel, join in the trial. It's okay that $10, $15 is nothing, right? If you can make a $500 every day, you don't need to worry about the $10. But taking the time to understand, interpret, and then see which analyst suits your for your trading style. And then if you take, definitely will be successful. And we'll be doing more of these education sessions, showing you how to do trail stop or how to do quick in, quick out, how to customize our think or swim. We'll be doing more of these sessions, right? And also about options, option Greeks, and a lot more things we'll be doing in addition to all the basic concepts also. So hope session was useful. I wish everyone all the best, and yeah, we can, right, we can get back all the losses what we had in the last 6 months, and make our portfolios green again. Yeah, we'll be sharing that worksheet to have the free runners. So PB is the analyst who will do position trading. Generally, his trades are a few weeks later. VC is generally few days. HK generally gives like 2 weeks, 2 weeks away from now, like that. Yeah, thanks, Murad. I will share your feedback to HK. Thanks, everyone. Thank you, and wish you all the best. And there are some stocks. Definitely, Vido will move unless there is some bad news on Monday morning. Disney and Vido, they will move good on Monday. Right. Again, I'll be sharing the watch list, all those things, but yeah, I'm expecting Vido and Disney to move very well. So basically, the main channel is where KC and PB will post it, right? Because many people follow them, so we kept them in the main channel if needed. Because PB generally gives few trades, so that's why we didn't create it. Because if you have too many channels, also it becomes difficult. So we kept PB and KC in the main channel for now. If needed, we can create a separate for PB later. And also, I suggest everyone to install Telegram desktop so that it will be easy to search, it will be easy to access, right? Everything watching on a phone sometimes might be difficult, but if you have Telegram desktop, if you have a separate laptop for watching these alerts, it will be useful. And yeah, Thinkorswim is definitely one of the best platforms to use. Right. So this is a software from TDM Retrade. If anyone need any referral, you can put a comment and I can send a referral in the option bots. But yeah, this is Thinkorswim platform, which we generally use in all our trainings, demos, with lot of great features, lot of great trainings. I suggest everyone to use Thinkorswim. This is the best platform. Yeah, out of all, right? I used IBKR, I used Webull. Webull is also good, but definitely Thinkorswim is the number one based on my experience or based on most of the traders also agree with that. Thinkorswim is the top. Right. In the next session, I'll show you how to set the right even before the market, how to create the orders. Right. For example, HK. Right. Even before the market itself, he gives the trades. Right. It's not. So you have time to set those orders. So 749 itself, he gave some trades. So he told light SQQ at 817 central. So it is 821 SQQ, TQQ. He saw that volume going on, and then he gave the trades within, right? If you see 847, both SQQ moved 100%, TQQ moved 125%. So even before market opens, we can create orders in Thinkorswim, or we can put orders, limit orders, and then when market opens, it will automatically get triggered. So right, even if you take 1 or 2 trades before 9 central, that is enough. You don't need to worry about all the alerts later. So yeah, right. HK is good, good in giving trades even before market open, and so you can follow them. So yeah, in the next session, I'll be showing you how to right, take trades or how to set these orders before market itself. So when market opens, they will get executed, and then especially breakout. Suddenly in first 5 minutes they go up 2-3 points or 5 points, and you make 100-200% within first 5-10 minutes itself. So yeah, I'll be showing them in the next session. Right, even for day trades also, yeah, Thinkorswim is the best platform for day trading. Yeah, HK is also giving some tips and some tips in his channel. So right, even on a weekend, you can put everything on an Excel. You can see like, okay, how is HK trades, how is VC trades, how is MG trades. You can put everything on Excel, or you can see what is the time difference between messages. Yeah, right. Can I take these trades? Can I take that trade? Like that, you can compare, and whichever you feel comfortable, confident. So again, everyone is good. MJ is good, HK is good, KC is good, AA is good. Right. Sometimes you feel confused, right? Oh, everyone is good. Which one to pick? But right, and we'll be sharing the reports. So you can also see who is giving more success, whose success is more, and you can, right. If this month you are following HK and MG, and as you get more experience, you can follow KC for scalping. Like that, yeah, go slow. Again, as you get more and more experience, you do less and less mistakes, and possibility to make more money. If you have, again, right, we didn't open the discussion channels for 2 reasons. One is there will be hundreds of traders asking, oh, should I sell now? Right? Stocks will go up, go down, but as long as the analyst is confident about the position, they will not sell, or they will not close, or right, if they see that okay, it is going completely in opposite, they will say that okay, right, okay, I'm taking a loss, or it hit the stop loss, or I'm closing this position. And second thing is, right, we always have these competitor groups, somebody coming and posting their links, or somebody talking something negative, right? Whether it is their mistake or whatever it is, or they might have entered only one or 2 lost trades. Out of 10 trades, 8 trades might be successful, but they might have just entered that 1 or 2 which did not go as expected. Then they'll be talking. So, and also, right, especially if new traders, they'll be asking 100 times the same question. Oh, this is going down. Should I sell it? Should I sell this stock? Should I sell this option premium? So, and the analysts will be busy looking at various algo generated alerts, and they want to give more and more alerts. So we all can make more and more money if we just answering the same common questions. Should I buy or should I average more? Should I sell? So whatever it is, they will be posting it in the channels. But we'll be doing some live sessions also with some of the analysts. They will show like how they are taking trades, what indicators they are looking, and will be right. We are thinking if needed, maybe in future we may do some interactive sessions within this, but that's the reason we didn't open the discussion. And also legally, we cannot give one-on-one advice to the members. So we can be a broadcasting channel. Whatever we are taking, whatever analysts are buying, we can share them. But we are not a financial certified, FINRA certified professionals where we can talk one-on-one and tell that, oh, you buy this stock or you sell this or you average this. One-on-one is not legally permitted. But you can, yeah, right. If something is urgent, you can put in the same bot, options bot or stocks bot, and one of our analysts will answer that. And yeah, we'll be doing live session in a week or so. With one of our analysts, we'll be doing a live trading session. So you all can be on a Zoom. You can watch their session on how they are taking trades, what indicators they are using. We'll be doing some sessions. Right. Again, we have a good team, right? As I told you, there will be some choppy days, right? Nobody can give 100% success, but as long as market is bullish or bearish, we all can make money. And if we can control our emotions, we don't become greedy, and suddenly after 2 or 3 successes, on the 4th one we put a lot of money, and suddenly the trade goes in the opposite direction, or we don't close. We don't take our capital and we try to wait for everything to become multi-bagger. Things may not go like that. So as long as we can maintain the discipline, we can maintain our emotions, we can be right. Again, it is difficult. It is not easy. I'm not saying it is easy. Even analysts makes mistakes. They do right. That again, we all are humans. We have that suddenly 2, 3 trades go right. We feel like, yeah, it is our day, and we try to put a lot more, and that 4th may not go well. So, but yeah, if we can maintain that, definitely we'll be profitable. We can we will be on a greener side, and we can, whatever losses we incurred, we can get all those things back. Right. Yeah. With that, thanks everyone, and have a great rest of the weekend, and talk to you all tomorrow in the option session too. Good night, everyone.